Hello friends, welcome back to my channel. Today I show you how to decode India's economic dilemma, that is rising inflation, the push for growth and the RBI moves that try to balance both. So by the end of this video you will be able to anticipate policy signals and understand the actions of RBI. Inflation measured by CPI, that is Consumer Price Index, is edging above target. Growth is uneven but resilient, and the RBI is weighing rate moves, liquidity operations, and macro prudential tools. So it is like steering a car where speed represents growth, bumps are inflation, and the RBI is the driver using brakes and accelerate. So, how to monitor CPI, inflation and core inflation weekly releases? If core rises, inflation is broad-based. So we have to track the industrial production and quarterly GDP prints for growth momentum. And RBI has to watch money supply, that is M3, credit growth, and bond yield for the financial conditions. And it has to keep an eye on crude oil and food prices. They often drive headline inflation in India. So inflation versus growth dilemma, RBI's balancing act in India. So we will start one of the biggest challenge for any central bank in balancing price stability, that is inflation control with economic growth. In India, this balancing act is managed by RBI through its monetary policy. Too much focus on growth can cause inflation, while too much focus on inflation control can slow down the growth. So this constant trade-off is called the inflation growth dilemma. Let us understand the dilemma. Inflation is a sustained rise in general price level of goods and services, and growth measured by the GDP, that is gross domestic product. It indicates the increase in economic activity, investment, and employment. The dilemma: if RBI cuts interest rates, borrowing becomes cheaper, investment and consumption rise, higher growth but risk of inflation. If RBI raises interest rate, then what happens? Demand cools down, inflation falls, but growth slows. So RBI's role and monetary policy. Flexible inflation targeting is known as FIT. Under the Monetary Policy Framework Agreement 2016, RBI's primary objective is to maintain 4% inflation, plus minus 2% is allowed. Monetary policy tools: repo rate, reverse repo rate, cash reserve ratio, that is known as CRR, open market operations, monetary policy committee, MPC decisions, all have to work. So, example, RBI's balancing act in India. During COVID-19 pandemic 2020, RBI cut repo rate sharply to boost growth. Liquidity is injected, supported businesses. Result was growth recovered, but later inflation started rising due to supply chain issues. Second example is post-Ukraine war 2022-23. Global oil and food prices spiked. India faced inflation above 7%. RBI increased repo rate from 4%, which was 4% during 2022, to 6.5% in 2023 to control inflation. Growth slowed temporarily, but inflation come back within target range. Third example is current scenario 2025. RBI still carefully adjusts rates to balance high growth potential. India, fastest growing major economy. We know that our economy is growing fastest among other economies, with inflation pressure on food and energy prices. So trade-offs in India is, if RBI prioritize growth, inflation erodes purchasing power, hurting poor households most. If RBI prioritize inflation control, investment and credit growth, and employment may decline, so RBI needs to strike a middle path. That is, ensuring moderate inflation while supporting sustainable growth. So way forward is supply side reforms is required. First, improve agriculture and logistics and infrastructure to reduce inflationary bottlenecks. Second is targeted fiscal support. Government should complement RBI by spending on productive sectors. Third is data-driven policies. Strengthen inflation forecasting and monitoring. Fourth is inclusive growth focus. Ensure that inflation control does not disproportionately hurt poor households. So we can conclude that the inflation versus growth dilemma is central to RBI's policy making. By using flexible inflation targeting, careful interest rate adjustments, and coordination with government policies, RBI strives to ensure price stability with sustainable economic growth. For India, achieving this balance is vital to maintain its position as the world's fastest growing major economy while protecting households from inflation shocks. That's all. Thank you.